So somebody's asking, if I want to walk away, if I want to, after spending a certain number of years in the US, I want to give up my visa, my green card or whatever, and I want to return to Singapore. What about exit taxes? So if it is, so the way exit taxes are triggered is typically in one of two ways. So if your net assets are in excess of $2 million, which is basically anybody that has a condo. So in that sense, the threshold is pretty low. Or if your average US tax liability for the past 5 years exceeds a certain threshold. Right now is like roughly around 172,000. So if your average tax liability for the past 5 years exceeds 172, it moves up with inflation, but let's, just for the purpose of this conversation, say if it exceeds 172, then you can trigger the exit tax. What does the exit tax mean? It means that you look at all your assets, and we assume that there's a huge liquidity event, that you sell everything. So there's a deemed sale on everything, and whatever the gain, the delta between what you paid for it, or what the basis is, what you paid for it, and what the market value is, that delta will be subject to tax, and that's the exit tax. So again, we do work with clients on what we call pre-expatriation planning. So before you go through the process of surrendering your green card, we can work with you. But bear in mind that if it is that you do not take citizenship, but you remain on a green card, that once you leave in under 8 years and you give up your green card, you won't be subject, even though your assets may be in excess of 2 million, or your tax liabilities in excess of 172,000 on average, you won't be subject to the exit tax once you're not a long-term expat being there 8 years or more. So when it comes around the 6th or 7th year, I'd say roughly the 6th year, because depending on when you enter, that it could be, it's 8 tax years, but it could be 6 years, depending on when you enter and you exit. Anyway, so you'd want to have that conversation with someone who's US tax qualified, just to see whether you do trigger any exit tax potentially, and what sort of planning you can do. But basically, you keep in mind, once you don't intend to stay there as a long-term resident, i.e., let's say 6 years or more, you should not be subject to the exit tax. But again, get advice. Hope that helped.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.